Welcome to the Chrisman Commentary, Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include how you could go from LO to PGA Tour superstar, my interview with Cardinal Financial's Brian Hurd on how manufactured housing, lender, builder, innovation, and shifting policy and market dynamics are reshaping the path to attainable homeownership amid today's affordability crisis, and why we're not seeing a flight to quality given the Iran-Israel news. Today's podcast is presented by Fly Homes, the leading wholesale lender focused on exclusively buy before you sell solutions. They empower loan officers and agents across the country to help their home buyers purchase their next home before selling their current one, eliminating the hurdle of sales contingencies, double moves, and financial roadblocks. Whether your borrowers run into DTI issues, need to unlock home equity for down payment, make a stronger cash-like offer, or even move potentially with no cash out of pocket, Fly Homes provides a full suite of financial products to help them move forward confidently before selling their current home. Hey, for you LOs who think things are slow, you can always go into golf. The best example of this is Ben Griffin, a former LO who has racked up $11 million in PGA winnings. A large number of professional athletes, active or retired, seem to live in Florida, Texas, or Arizona, taxes and climate being what they are. Of those, who suckles up to the federal government the most? As of 2022, federal funding made up 40% of overall revenue in nearly half of U.S. states. Federal funding accounted for the greatest share of revenue in Louisiana at 50.5%, Alaska at 50.2%, and Arizona at 49.7%. By contrast, it accounted for just 22.2% of Nevada state revenue, 25.9% in Hawaii, and 27.6% in Virginia. With Republicans looking to cut federal spending, some states will be more vulnerable than others. It's believed that President Trump will cut federal funding to California in the wake of everything we've seen this week. California, by the way, not only accounts for 20% of the nation's mortgage activity, but overtook Japan to become the fourth largest economy in the world. And it's not just conflict we're seeing in Los Angeles or California. Despite the Trump administration's attempt to lessen conflict in the area, I guess I'm talking California and the Middle East, Israel attacked Iran's nuclear facilities and killed its military commanders earlier today, causing investors to sell stocks, but the U.S. bond market is nearly unchanged. While it is still a developing story, if sustained, energy prices will become yet another headwind for the global economy. Oil prices are something for the Federal Reserve to address after next week's meeting, as the expectation is to leave rates unchanged and stress that the outlook for the U.S. economy remains uncertain. The median dot plot for 2025 is expected to show only 25 basis points of policy easing this year, down from 50 basis points at the March meeting. A slightly different expectation, rather than the flight to quality, is that investors are going to move out of dollar-based assets over time. With the Fed in position to cut short-term rates dramatically in the next year, there's an awareness that a steepening yield curve makes the long-term Treasury bond not a legitimate flight to quality asset. Just like my awareness of my podcast voice and intonations that everybody makes me aware of. For today's interview, see, I told you that I had a different voice than my podcast voice. For today's interview, I want to welcome to the show Cardinal Financial's Brian Hurd to talk about how manufactured housing, lender builder innovation, and shifting policy and market dynamics are reshaping the path to attainable homeownership amid today's affordability crisis. He's Senior Vice President, National Builder at Cardinal Financial, which is helping to shape the future of home financing. Cardinal Financial is all about unlocking attainable homeownership. If traditional homes are out of reach and you don't qualify for affordable housing, they've got a solution. Their attainable housing program supports middle-income families with options from modular homes to condos. People have gotten creative with housing. Maybe you're renting out rooms, maybe you're renting out a garage, maybe you're looking at tiny homes or modular homes. Manufactured housing is what I want to talk about today. It's certainly gained renewed attention here and outside of these darn millennials that are trying to get super creative with their housing. What's changed in recent years in general to position it as credible and scalable, a great solution for today's affordability challenges?
Obviously housing affordability has been a huge driver towards, alternative or what had been previously called alternative housing, modular, manufactured specifically. That's the obvious one. But, to be honest, perception, that is the biggest factor, I think, in my opinion. And what I mean by that is, for the longest time, I mean, when you hear the word manufactured home, what do you think of? You think of a mobile home or, a
Double wide going down the highway with an oversized load sign on it. Yep.
exactly it, which is annoying, for a lot of people. I mean, you got to go slow, that sort of thing. So most people have that perception. I mean, I had that perception. It all changed about 5 years ago. A good friend of mine, Michael Jones, drugged me out to a show in Louisville. They do a big manufactured home show out there. That was my first real opportunity, Robbie, to actually experience a product. And you have to touch it, feel it, walk through it, all of that. And the fact of the matter is these are homes. They're not just manufactured homes. They're not mobile homes. They're not trailer homes, all that kind of stuff. They're homes. They are so much more than what most people think. A lot of the same materials, studs and sheetrock and all that kind of stuff, granite countertops, stainless steel appliances. But they've come a long way since that quote unquote single wide, double wide driving down the highway. So I think that's been a huge driver, and it shows by the numbers, right? I mean, like everything else, they took a little bit of a decline in 2003, but when site built is down 3%, or roughly 3% in 25. You've got manufactured that saw a 16%, excuse me, in 24, site built that saw or manufactured up 16% from 23 to 24. So it's a very viable product that's starting to earn its place within the market share. And I think that's changing perceptions with a lot of lenders. For Cardinal Financial, for example, that is one of our key drivers. We want to be the largest manufactured home lender in the country. Traditionally, it's been a space that's been held by, kind of the old guard of the lending institutions that focus on chattel. We want to change that. And hopefully a lot of other lenders jump in the space as well. I love competition, so bring it on.
Yeah, competition is certainly driving things forward right now, and especially in the mortgage industry from a technology perspective. It's like
Oh
one
yeah.
company gets tech, the other one. So I think it's great there. It's been neat to watch the PR around some of these segments evolve. And on this podcast, we talk a lot about the non-QM space or the
Mhm.
home equity lending space. These things had to get over their own little PR hurdles. Manufactured
Yep.
housing, it sounds like it's gone through the same thing where it's kind of emerged on the other side here, and people
It
really
had to
like,
get out of its own way,
yeah,
essentially.
yeah, exactly. And so uh, there's certainly interest. Lenders realize that they're working with builders. Construction lending has always been, maybe it's a niche part of somebody's portfolio. It's starting to
Yeah.
expand a lot more. Can you share, at least from your perspective, how you see these lender builder collaborations evolving and kind of some of the innovations that are moving the needle on making these homes more affordable?
Yeah, that's a good question, and I'll start off by saying there's no silver bullet, but, what I can say is kind of the three things that we at Cardinal Financial really focus on. I mean, you mentioned technology. Technology is a buzzword, AI is a buzzword, but, those mortgage companies that are truly investing heavily in that space, for example, we have a custom-made LOS called Octane. What that does is it dramatically reduces the amount of touches that a file takes to go from pre-approval to closing. I mean, you might have 12, 13, 14, 15 different people throughout the life of a loan. That costs a lot of money. You got to pay for salaries and bonuses, and you got to pay for, insurance and all of that kind of stuff. If you can cut down on the actual cost and the amount of people that need to look and touch a loan throughout that process, what does that do? I mean, that dramatically improves margins, which then dramatically improves the rates that we can provide as a mortgage company. It also makes things quite a bit easier. One of the key factors for home builders is speed to close. How quickly can you get a deal closed? We can get to the point where, hey, we're not just talking 30-day closings, we're talking 20-day closings, 15-day closings, that sort of thing. That is critical, not just for the manufactured home space, but your larger production builders that say, hey, it's December 15th. I need this deal closed by December 31st, come hell or high water. AI and technology in general dramatically improve that. So programs are important. things like down payment assistance, grants, all of those things are really becoming a lot more important because you get buyers, they don't have tons of money to put down. They may not have perfect credit. So, as an industry, we really want to be able to focus on programs that help those types of buyers. And then finally, in my opinion, good old fashioned service. I think we sort of lost that as an industry over the last several years. We need to get back out there and do the things that got us successful in the first place. Sometimes that means getting off your butt, going and visiting that community, and shaking hands face to face with a sales agent. Get to know those people, communicate with those people regularly. I think that is absolutely critically important. Um, and something that I'm really encouraged to see. I mean, it's something that we teach our people: be present, be in the marketplace. Look, Zoom is a great tool, but there's no substitute for face to face. And then ultimately, people do business with who they like. So be out there and be likable.
Well, you got me wanting to go see these communities, but after you mentioned granite countertops, top of the line drywall finishes and those sorts of things.
I'm
Sounds like
telling you, it's
that's
changing.
certainly worth checking out. And maybe I put the cart before the horse here a little bit, and I should have asked you at the start of this interview. Yeah, there's a lot of talk about affordability problems
Mhm.
in this country. There's more people willing to complain than there are people willing to offer actual solutions. Kind of
Yeah.
drivers behind the affordability crisis. Everybody knows interest rates are high right now. Home
Yeah.
prices are high as well. But what do you see as kind of deeper drivers behind how we got here? Obviously, there's been a lot of conjecture that builders haven't built to the levels that maybe they had over the previous several decades.
Yeah, I mean, obviously, yes, rates are really, really important. I mean, nobody wants to give up their bright, shiny 2.5% interest rate and then go change it for 6% or whatever it may be. But, housing supply, conjecture or not, the facts are there. I mean, ever since 2008, our supply just isn't what it used to be. And depending on which economist you talk to, we might be 3.5 million short, we might be 6 million short. I've seen as high as 7 or 8. Let's just split the difference somewhere and say we're 5 million units short. Obviously supply and demand. The less supply, the higher the demand, the higher the cost. So that's a big part of it. Inflation. We all hear that all the time, cost of eggs and cost of chicken and all that kind of stuff, of course. But the cost of housing is impacted by labor shortages, trade shortages, supplies and materials cost more. All of that has an impact on housing. Um, my, I think one of the biggest areas that most people never think about is regulatory fees. I mean, I don't know if you've seen the numbers, Robbie, but on average, 15 to 20%, in some municipalities, 30% of the cost of a house is swallowed up, wasted, thrown away, whatever you want to call it, by regulatory fees. I mean, in Southern California, that those numbers can be 120, 130, $140,000 for regulatory fees. I mean, that's insane, and that's something that has to change, but most people just don't really think about it. So, yeah, those are really the biggest drivers in my opinion.
Well, you've talked about attainable
Mhm.
homeownership, which I guess I could put that in air quotes, attainable homeownership, which I think is a really noble concept. It's a great goal for people out there. Can you explain a little
Yeah.
more? How do you define it? And I guess uh, first off, let's start with you defining it, and I have a follow-up question real quick after that.
Yeah, you bet. I mean, at Cardinal Financial, we prefer to use the term attainable, and I mean, affordability gets thrown around. I think affordability is really more relegated to subsidized housing, whereas attainability focuses on what's called the missing middle. They make a little bit more money or a little too much money for, heavy subsidies. They don't make enough to purchase the average median home price in a lot of different municipalities. That's where we need to focus. And as an independent mortgage bank, that's where we can focus most of our attention.
Mhm. And so, how do you see this evolving over the next year or so? Or I guess what trends are you watching when it comes to attainable home ownership?
Yeah, so I think that we're starting to see and participate in a lot of projects that can bring this type of product, meaning manufactured, modular, that sort of thing. How do we bring it to market at scale? I mean, most of us, when we see manufactured, we see the dealerships on the side of the road, and that's great. That's where a huge portion of that 103 some odd thousand homes that were sold last year, manufactured homes, come from. But how do we bring to market in a much larger, scalable manner so developers, builders, they're really starting to get into this space, and for a number of different reasons. I mean, number one, it's typically substantially less expensive, anywhere from 20 to 30 to $40 less a square foot, sometimes $100 less a square foot than, the average cost of a home. So obviously there's the price factor, but it's speed. I mean, if the average home price, and I should know this statistically, I don't, so I'm just going to kind of give a best guess, but if the average home takes 6 to 8 months to build, imagine being able to bring homes to market that take 60 days, 90 days from the time somebody signs a contract until the time they get keys into their new home. Well, if I'm a developer, that's incredibly attractive to me, because instead of having 1 or 2 turns a year, now I can have 3 and 4 and 5. And then it also has a really cool impact, or big impact, I should say, on areas that are prone to disasters. How quickly can we rebuild? Well, again, manufactured, which has, really high standards in terms of energy efficiency, safety, longevity, all of that. 60 days, 90 days, we can have new homes on the market. And again, I think the trends we're seeing is the way they're being sold. And it used to be, or it traditionally has been on the dealerships on the side of the road. Well, now we're doing whole communities that have model homes, hike and bike trails, amenity centers. You drive into these things. I was at one on Monday in Knoxville. I believe it's the largest cross mod community in the country right now. I mean, these things are beautiful. Higher roof pitches, dormers, front porches, garages, all that. You cannot tell. I challenge anybody to walk in there and tell me they can tell the difference between one of those cross mods and any other site built home out there. It's pretty amazing.
It is pretty amazing, and I like that we've shifted from, when it comes to attainability. What's my rate going to be? What's my rate going to be? That was the way it was. Now it's what's my payment, and some of that
Yep.
brings into this, disaster impact you mentioned of what's my insurance going to be? What's property tax going to be? What's the overall lump sum here, and what is attainable for me to actually be able to afford? So it's nice that people's psychology is shifting a little bit. I mean, there was
Well said. Yeah.
I look back at this last election cycle we went through, and housing was kind of a bipartisan issue. Obviously, each side had different ideas about how they were going
Yeah.
to accomplish more affordable housing, but it has become a little bipartisan in terms of we want more affordability for the general American public. We want more first-time home buyers. We want more people in homes. We want to find ways to accomplish that. It's died down a little bit. A lot of the chatter around the space is, hey, what's the future of Fannie and Freddie? Rather than, hey, how do we how do we give tax credits, or how do we spur builders to build more, whatever it might be. But looking ahead, what kind of policy developments or market developments, technological developments, do you feel like could have big impacts on expanding access to affordable housing in the near future here?
Yeah, and I'll try to keep this as apolitical as I possibly
Good.
can. But, I mean, you mentioned it has been somewhat bipartisan, and there's been some good state policies. California's SB 9, which allows for lot splits, and each one of those lot splits can have up to 2 houses. So essentially you're telling landowners that, okay, well, landowners and builders and developers, you can have up to 4 homes in attractive land. It's higher density. Texas in our own backyard, Texas Senate Bill 15 worked to remove a lot of the regulations around density, minimum lot sizes, that sort of thing. Um, so currently, it's maybe died down, but maybe just because, the administration is new and we haven't heard a lot about it yet. But look at the Housing Supply Frameworks Act. I'm not a policy expert, so I couldn't tell you all the details. But I mean, really what it does is it's looking to update the modern zoning and land use regulation laws. That's where, I kind of mentioned at the very beginning, if land regulations and building and developing regulations are a huge issue, how do we remove those barriers? One of the biggest ones is the zoning regulations around manufactured housing, and that's brought on by NIMBYism, not my backyard. How do we accept that this is just a house? This is not a manufactured home. This is simply a house that was built largely off site. So zoning like that is providing a really big difference. Other than that, it's educating ourselves. Like I mentioned, me going to that show back in 2020, I needed to educate myself. On the sun, I'm a custom home builder. I've been around it all my life. I thought of it as that trailer or a single wide going down the street. So, and that's a huge part of the reason why I came to Cardinal, because of that desire to be the largest one. I think that other lenders, builders, manufacturers, we need to educate ourselves on what this product really is. And I think it also means, hey, when we see that tractor trailer driving down the street and we complain about, the traffic, realize that's somebody's home. That's a roof over somebody's head. And I'll give credit to my good friend Andrew Bryan at Clayton for that one. But that's what it is. I mean, getting to understand that this is a very viable and growing into a mainstream product, not just niche. I think that plays a major factor as well.
Roof over someone's head, and a increasingly nicer and nicer roof over someone's head as some
Yes.
manufactured things.
Yes.
I mean, you
Yes.
bring up a really good point there. Housing is a local issue. We could talk about these, statewide,
True.
state
Yeah.
policies or national policy. It's a local issue. It's a in my backyard, no in my back, not in my backyard type of thing. And
So true.
that's where a lot of the difference can be made. I wish you the best of luck at Cardinal Financial. What y'all are doing is pretty neat, and I appreciate you making the time for me. So thank you.
Appreciate the conversation, Robbie.
Optimism about easing inflation, we received both lower than expected CPI and PPI reports in the last couple of days, has caused bond yields to decline. And strong demand at Wednesday's 10-year Treasury auction and a solid 30-year bond reopening yesterday further bolstered sentiment toward U.S. government debt. While some market participants are quick to draw bearish conclusions from routine supply events, analysts argued this behavior often overlooks the consistently solid sponsorship Treasuries have attracted. In this environment, any yield backup following the auction may offer a buying opportunity rather than signaling a shift in trend. Broader investor sentiment remains influenced by ongoing trade tensions as President Trump signaled imminent unilateral tariff decisions, potentially ending the current pause in reciprocal tariffs by early July. Markets remain uncertain whether this is another negotiation tactic or a sign of fatigue with multilateral trade diplomacy. Despite trade-related risks, the U.S. economy continues to show resilience, with job growth remaining positive, unemployment low, and inflation subdued for now. However, yesterday's unexpected rise in unemployment claims may validate concerns about labor market softening, which could shift the economic outlook heading into the Fed's policy decision next week. Today's loan data point is preliminary June Michigan sentiment, due out later this morning. After Israel's attack on Iran, indicating a big drop in American influence in the Middle East, we have agency MBS prices unchanged from Thursday's close, the 2-year yielding 3.91 and the 10-year yielding 4.36 after closing yesterday at 4.36%. Let's wrap up with a joke and some housekeeping. The European Commission has just announced an agreement whereby English will be the official language of the European Union rather than German, which was the other possibility. As part of the negotiations, the British government conceded that English spelling had some room for improvement and has accepted a 5-year phase-in plan that would become known as Euro-English. In the first year, S will replace the soft C. Certainly, this will make the civil servants jump with joy. The hard C will be dropped in favor of K. This should clear up confusion, and keyboards can have one less letter. There will be growing public enthusiasm in the second year when the troublesome PH will be replaced with F. This will make words like photograph 20% shorter. In the third year, public acceptance of the new spelling can be expected to reach the stage where more complicated changes are possible. Governments will encourage the removal of double letters, which have always been deterrent to accurate spelling. Also, I will agree a horrible mess of the silent E in the language is disgraceful and it should go away. By the fourth year, people will be receptive to steps such as replacing tith with z and w with b. During the fifth year, the unnecessary o can be dropped from words containing u, and after this fifth year, we will have a real sensibility written style. There will be no more trouble or difficulties in bearing to understand each other. The dream of a united Europe will finally come true.
In soon fifth year, we will all be speaking German like they wanted in the first place. Oh.
Thanks again to Fly Homes, the leading wholesale lender for buy before you sell solutions. Whether your borrowers run into DTI issues, need to unlock home equity for down payment, make a stronger cash-like offer, or even move potentially with no cash out of pocket, Fly Homes provides a full suite of financial products to help them move forward before selling.